Greetings, I'm Shaun Pruitt, Zacks equity strategist, and today I'm going to be discussing stocks to watch for the first $1 trillion holiday shopping season. So with Black Friday approaching at the end of the month, savvy investors may be eyeing the retail sector for the possibility of lucrative returns. And to that point, the day after Thanksgiving will officially kick off what is projected to be the first holiday shopping season in U.S. history to surpass $1 trillion in retail sales. And according to the National Retail Federation, the NRF, American consumers are expected to spend between 1.01 to 1.02 trillion during November and December 2025, which will mark a 3.7 to 4.2% increase over last year's total of 976 billion. And keeping this scenario in mind, here are a few retail stocks and an ETF to consider as a potentially record-breaking holiday shopping season approaches. And this brings us to retail leaders with an extensive reach. And Amazon and Walmart stand out among these leaders with diverse, resilient business models that can capitalize on the peak holiday shopping season while also generating multiple revenue streams. And Amazon especially stands out in this regard as the e-commerce giant has evolved into a platform-based ecosystem with a massive profit engine regarding AWS, its AI-enhanced cloud computing services. And additionally, Amazon is seeing robust growth in its subscription services like Prime Video, which are being boosted by advertising revenue from sponsored listings and display ads. And Amazon holds the top spot among global cloud providers and is second to Netflix as it relates to worldwide streaming subscribers. So it's also noteworthy that Amazon's e-commerce operations have been significantly enhanced by robotics, seeing productivity gains by improving speed, accuracy, and efficiency across its fulfillment network. And notably, Amazon has over 1 billion robots. It's deployed over 1 million robots, rather, since it acquired Kiva Systems in 2012. And these include AI-powered mobile robots, robotic arms, and automated packaging systems that handle sorting, lifting, and transporting goods. So Walmart, on the other hand, has made significant strides from being a traditional brick-and-mortar powerhouse to taking some of the online market share as well. And having a niche as a grocery provider has made the omnichannel retailers' e-commerce expansion unique and successful, with the noteworthy that Walmart's now bringing annual digital sales of more than 100 billion. So low-cost pharmacy services, including flu immunizations, have supported Walmart's budget-friendly retail offerings that have been much desired amid a high inflationary environment. So at the moment, Amazon and Walmart stock both scored a Zacks ranked #2 buy and are expected to post new peaks in Q4 sales after posting quarterly records of 187.79 billion and 169.59 billion last year, respectively. And there you can see that great long-term performance from Amazon, both Amazon and Walmart stock over the last 10 years. They're both up over 400%. So next up is Crocs, ticker symbol CROX, which is shaping up to be a top apparel stock to buy for a rebound. So attributed to higher tariffs, apparel leaders have been the hardest hit stocks in the retail sector, and Crocs is one of the most appealing to consider for a rebound. So sporting a Zacks ranked #1 strong buy, the sell-off in Crocs stock is starting to look overdone as a leading comfort footwear brand, with CRX trading at just 6 times forward earnings, as you can see here. So trading at a steep discount to a Zacks textile apparel industry average of 17 times forward earnings, Crocs EPS is expected to dip 8% this year, but it's projected to rebound and rise 4% in fiscal year 26 to $12.60 per share. And more reassuring is that fiscal year 25 and fiscal year 26 EPS estimates are up over 5% in the last 30 days. So this comes as Crocs recently crushed its Q3 earnings expectations by 22% at the end of October, posting quarterly EPS of $2.92 compared to estimates of $2.39. And here you can see that in the last month, the fiscal year 25 EPS revisions have gone from $11.55 per share to estimates of $12.13. And fiscal year 26 EPS estimates have gone from $11.60 to $12.60 in the last 30 days. So honorable mentions in an ETF to consider. So in terms of other retail leaders with a rather extensive reach, Costco is worth watching with a Zacks ranked #3 hold. And sharing a similar ranking, a few more apparel stocks to consider for a potential rebound amid expectations of a record holiday shopping season include Lululemon, Nike, and Under Armour. And furthermore, the consumer discretionary select sector ETF, ticker symbol XLY, is another way to get exposure to some of the top retail stocks, with Amazon, Nike, and Lululemon being among its holdings. The XLY currently lands a Zacks ranked number 3 hold as well. Greetings, I'm Shaun Pruitt, Zacks Equity Strategist. I hope you enjoyed this content. For more, please feel free to visit zacks.com/promo.